everybody. Today is the day we've released our half-year results. Very important day for both James and I as we have the opportunity to speak to our shareholders as well as the broader community. And if I look at today's results, we're clearly moving into a much more challenging environment. I'm very satisfied that we stand here with a strong balance sheet. But also it's a time to reflect, and I think we have to be very, very proud about what we've achieved over the last periods of time in order to drive forward with our strategy. But back to the results. So James, give us a bit of a synopsis on what the results look like today.
Thanks, Lex. So our underlying profit is down slightly first half this year on first half last year. We made a number of pricing changes in our Master Trust and Platforms business last year, which have flowed through to lower revenue levels, but we have done really well on our costs. We did say to the market we were going to reduce our controllable costs, and we've done really well on that, and particularly in the advice area where we've more than halved the loss, which is one of our key market statistics. The other issue we faced is the competitiveness in our banking environment, banking business, whereas our net interest margin, so that the rate we charge customers or the margin we make after what we charge customers has gone down about 39 basis points this half. Our New Zealand business was reasonably resilient, and our group investments actually did much better than last year, which is really good.
So a good summary of the results, James. Maybe you can talk a bit about the cash flows, because there's been some developments there as well.
Yep. So our wealth management cash flows, which is the key measure for our wealth business, still is in a net outflow position of about 1.9 billion in the half, but that did improve significantly from about 3.6 billion last year. So getting some good traction in our independent financial advisors, as well as lower outflows in our Master Trust business. So that was really good. And on the bank, we did have a good half in the bank growth. We grew just over system at 1.15 times system growth. We did pull back in Q2 when we saw the market was pretty tough. Although we have seen June and July being really good as well, which is great to see.
Yes, so the results have been impacted by the current environment, and we've made some conscious decisions in relation to the bank. But we've importantly announced that today we're going to deliver $1.1 billion back to our shareholders. Now, for you and I, we talk about this every day and have done for a long period of time. But what does that actually mean? Yeah,
so it's been a really important promise to shareholders that the board made when we announced the Collimate Capital trade sales, was to return the majority of proceeds to our shareholders. We will start that with a $350 million on-market share buyback. So that's where we go into the market and buy back our own shares and cancel them. And then next year we'll look to do either a special dividend and or a capital return. So 1.1 billion in total over probably the next 12 months or so.
Yeah, so it's not that easy. We've got some regulatory and shareholder approvals to get, and I know you and the team will be working hard on that, but it certainly is a strong commitment about that capital return. So it's good to know. As we look forward to the next 6 months, of course, we talk to the market about what we expect from a financial perspective. When I reflect, I think we've done an enormous amount of work in the simplification part. We've talked about the sales of Collimate, and we've still got to complete those, and there's more work to be done, so I'm not underestimating that. But we've also done a lot about repositioning our businesses, whether to drive efficiency or growth. As we look forward, we've got to continue to focus on that, but we also want to look at some new opportunities, right? Because we're in a position where there is likely to be some things come to market. Some of those things have happened already. I'm going to let you talk about those.
Yeah, so we've got two new exciting business developments that we have been talking about for some time internally and making a little bit more of an impact externally. So one of those is our launch of our bank direct-to-customer mortgage offer with partnering with a fintech called Nano. So it's really exciting.
And I'm a customer.
You are a customer. We've started that. I think as Sean said last week, we've already had 6 customers in the first week, which is fantastic. So that's obviously AMP broadening its channel reach. So probably the first time that we've made a reasonable, sizable investment in going direct to customers in the bank. And the other exciting one, which is a little more complicated, is our retirement offer, which we're launching later this half, which is a brand new product, which we think really sort of first to market in terms of solving important retirement needs for customers. So stay tuned for both of those, more coming shortly.
Yeah, really looking forward to that. So as we move forward, we're going to clearly be a much more focused organisation on wealth and on banking in Australia and New Zealand. And that's going to give us a lot more time to really look for new opportunities, look for growth. It would be remiss of me not to thank the people for the hard work. I'm really excited about moving forward as a purpose-led organisation. So yes, there's going to be some challenges, but there's going to be some great opportunities as well. So let's get on with it.